the indication is not that we aren't going higher, it's that we may have a bigger lag than most people expect. I mean, personally, I said I think a couple months, but I also said it could go into well into 2025. I mean, we might get a big trading range between oil and used gold, but 2,500 and 2,900 maybe. We might get a new high in January, February of 2025, maybe 3,000. And that's it, we're on our way. And then it disappoints and gets down to 2,700, and it's in a higher trading range, but still stuck in a range.
Gold prices surged past the $2,700 mark on Friday, reaching their highest levels in 2 weeks and securing their most significant weekly gain over a year. This week, the metal has climbed over 5%, driven by escalating geopolitical tensions and renewed safe haven demand. This marks gold's best performance since last October, when the Middle East conflict triggered a rally that pushed prices to record highs. The intensifying Russia-Ukraine crisis has been a key driver of gold's upward momentum, adding more than $173 since it hit a 2-month low of $2,536.71 last Thursday. Despite headwinds such as the US dollar reaching a 13-month high and Bitcoin hitting an all-time peak, gold has continued to attract investors seeking stability in uncertain times. Historically, gold has performed well during geopolitical turmoil, economic instability, and low interest rate environments. A prominent market analyst, DavidMorgan, suggests that gold may trade between $2,500 and $2,900 for an extended period. While a breakout to $3,000 or higher could happen as early as 2025, he cautions that such a move might lead to a pullback, resulting in a higher trading range. Morgan also highlights the importance of the gold-to-silver ratio, which currently stands at 86.48, slightly down from 86.76 on Thursday. For the final leg of the bull market to be confirmed, Morgan believes the ratio needs to fall below 70. Silver has shown positive movement, rising 1.22% on Friday to $31.17 per troy ounce, up from $30 the previous day. Silver prices have surged nearly 31% since the start of the year, benefiting from both safe haven demand and its industrial applications. However, silver's relative underperformance compared to gold suggests it may still lag in the broader bull market. While recent gains indicate growing momentum, silver's slower pace underscores the need for further improvement to confirm its alignment with gold's trajectory. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think gold maybe got slightly ahead of itself. I mean, it was maybe overbought. And, Trump was maybe the reason, maybe not, but it obviously had a big sell-off. These are normal moves in a bull market. I mean, I've warned about this time and time again, where, the main idea is to stay on board, hold tightly all the way up, because there will be these shakeouts that will scare people out. And this probably the first one we've had since we broke well above the 2,000 level, got all the way up to about 2,800. Now we've had this correction down to 2,550 or so. It's coming back up. I think we're in a trading range for a while. Then the trading range could be to the end of the year. It could go into halfway through 2025. I don't know. But I do think that we are in the third leg up, which should be the most powerful. It should be fairly short in duration, because we've had a bull market basically from the year 2000. It went 2000, 2011, and then from 2011 till recently, we basically did a big, down move, big correction, all the way from roughly 2000 to 1050, and then back up, and now we're making new highs. So the big picture again is higher prices, and how long? I'd say 2 or 3 more years, or probably at the end of the cycle. Gold is a monetary hitching post of the universe. And when you have a debased currency, and they're all debasing, just some at different rates than others. The dollar's stronger than other currencies because they're debasing faster, but they're all heading to zero. So because of that fact, you're going to see gold maintain its value, but the price varies because they keep increasing the supply of US dollars and yuan and euros and anything else. And because of that, in paper terms, the price increases, but the status of gold, gold's an ounce of gold. So it's done its job, and I think that is the main overriding thesis, well on top of geopolitical concerns, which will fluctuate the market within the big context that you just outlined, or we just outlined. Yeah, I'm a little disappointed, but not surprised, because I'm looking for a gold silver ratio to be 70 or lower to confirm that we're in the last leg up. And we really haven't seen it yet at silver. And because of that, concerns me. It doesn't mean we're not in the third leg up. I think we are because of gold's performance. But I want silver to get on board. It certainly has outdone gold, 2 weeks ago as far as percentage gain, but not by very much. And here we are. Look, it was silver looking weaker than gold. And so I really am not overly concerned. The indication is not that we aren't going higher. It's that we may have a bigger lag than most people expect. I mean, personally, I said I think a couple months, but I also said it could go into the, well into 2025. I mean, we might get a big trading range between, I'll use gold, but, 2,500 and 2,900 maybe. We might get a new high in January, February of 2025, maybe 3,000. And, that's it, we're on our way. And then it disappoints and gets down to, 2,700. And it's in a higher trading range, but still stuck in a range. So that wouldn't really surprise me, especially if what we already talked about, the Ukraine war goes away. It looks like the Mideast has calmed down. And, there's so many good things happening in the Trump administration. Why worry? Big Brother's taking care of us, and we don't have anything to worry about. Daddy's going to make it all better, and, everything's great again. So,
adoption of central bank digital currencies has slowed in recent months, but renewed efforts in countries like China and Australia aim to reinvigorate their development. These initiatives are expected to drive new use cases and foster innovation within the digital currency space. China has recently upgraded the digital yuan hardware wallet introduced by the People's Bank of China to enhance its usability for tourists and less tech-savvy residents. This new version incorporates features like QR codes and near-field communications technology, improving accessibility and convenience compared to its earlier iteration. Despite these advancements, CBDCs remain a contentious topic. Critics argue that their centralized nature exposes them to risks of manipulation and overreach. Financial analyst DavidMorgan emphasizes that physical assets like gold and silver are essential hedges to counteract these potential threats. Their tangible nature makes them immune to the risks of devaluation or erasure by central authorities. Gold and silver, whether held in physical form or through innovative options like gold and silver-backed cryptocurrencies, provide a decentralized alternative. While cryptocurrencies offer another route, Morgan notes they may not be the most viable long-term solution due to their inherent volatility and regulatory uncertainties.
BIS, with Bank of International Settlements, has basically put forth as a mandate for how these central bank digital currencies all work together under one uniform agreement, which I already outlined, to get the new system in place. So that's the bigger picture. And so how do we mitigate that? Well, there are ways to do it. Of course, gold and silver are really the primary ways to do it. You can do it now, face to face. You can also do it in the digital world. There are several gold and silver backed cryptocurrencies that you can use. Cryptocurrency is an option. I don't see it as the most viable option personally, but it's there. So you've got that option as well. And then you could go even further. I mean, you can go back and look at some of these pushbacks on even during the Great Depression. If you look in recent times, the Ithaca dollar, communities just did this during the Depression. The Ithaca dollar is a good example of more recent times where a community says, look, we know what money really represents. It represents labor. And we're going to put a unit of account into a piece of paper on how many hours you worked, and you're able to trade those among our own community. That actually works. So there are alternatives. There aren't many, and especially your freedom, as you know more than probably anybody, especially at such a young age, and again, publicly commend you for that. But, what is it? Finance and liberty. There's a direct relationship between the freedom of a monetary system that really removes government from the overseer of the value, where we have a free market. And if you have the currency that's controlled by an entity that tells you what value it is, how much it costs, and all the things that are in the system now, you basically have a huge control mechanism that takes away your liberty. Most people don't think of it in those terms. I know that you do. But as, let's say, the next system comes into place, which it's already done in China. I'm going to digress for a moment. But right now, there's 1.4 billion people in China. 800 million of those people are on the system. And this is the system that the banking elite want to go worldwide. And they don't use anything but their phone. And I'm going to put at the end of my speech, Elijah, that they actually use a handprint as well. And of course, I've always thought there'd be a microchip, implanted into your right hand, perhaps. But this one in China actually reads your palm without a chip in it, based on like a fingerprint, because the lines in your hand are unique, just like a fingerprint is. So if you're in China and you forgot your phone or the power's down and you don't have a charge on your phone and you want to buy something, it's not ubiquitous. It's not everywhere in China, but it does exist where you can just put your hand over a reader and still get your 2 Cokes and whatever they buy at the convenience store and walk out. So these are very interesting times, but basically, silver guru and all that, and I'll take the accolades and, whatever, I'll take the good with the bad. But, if you boil down, David, what's one word for what you've done, what you want, what you need, what you want for, the planet to be happy, joyous, and free? It's simple. It's freedom, period. And without freedom, it doesn't matter how much gold or silver you've stacked. If you can't use it, spend it, do with it as you wish, interact freely, speak freely. I mean, really, what good has it done you? And the answer is not very much, in my view. So, it's a bigger picture here. I know you're well aware of it, called liberty and finance, but you talked about freedom throughout the whole thing, and that's the big picture. I mean, you got it very early age, and that's, I think, something that I need to remind people that, having a big stack is even of real money, gold and silver. If you don't have the freedom, again, I'm repeating, but what good is that? And I think that's a message that may be lost, because especially the American system is pretty much, if you have financial freedom, you have freedom.
Gold and silver continue to demonstrate their significance as reliable stores of value in uncertain times, offering stability against economic and geopolitical volatility. Their role as tangible assets becomes even more critical as digital currencies like CBDCs gain traction, highlighting the importance of diversification in safeguarding wealth. How can investors effectively balance digital innovations with the stability of traditional assets in an evolving financial landscape? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.